Good afternoon, Wealth Our Way Nation. What is going on? It is your man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. I welcome each and every one of you to episode 54, three big Social Security mistakes. We spoke yesterday about how we're going to retire. And this week, I think I'm going to keep that theme alive and talk about the complex landscape of navigating Social Security. Well, I want to first and foremost, before we get into today's business, thank each and every one of you who are live with me as I stream across the Wealth Our Way Facebook and YouTube platforms. I want to give the special Wealth Our Way Nation salute to all the Wealth Our Way Nation members who watch this program pre-recorded overnight, over the weekend, on their lunch break, wherever they can squeeze 15 minutes of financial literacy in. And last but not least, a heartfelt how you doing to the Life 101 platform members who listen to the audio of this here program. So Social Security, very interesting topic. First and foremost, I do acknowledge that I'm in lockstep with my audience. And I do realize that the majority of us are not of age to receive Social Security as of yet. However, as my grandmom always told me, an ounce of prevention beats a pound of cure. We should always be planning for our future, planning for our retirement. And yes, there is a way to plan for Social Security. We talked about the three streams of income that most people will utilize in their retirement: Social Security, any type of job, pension, and their private retirement savings. So we're going to focus a little bit on all of those streams this week. Today, I'm going to jump into Social Security and the three big mistakes that people make. I'm not going to leave you in suspense. I'm going to tell you those mistakes right off the bat, and then we'll delve into each of the three mistakes. So the first mistake that people make when it comes to planning for and taking their Social Security is taking it too early. I understand, we talked about it yesterday, and yes, there is also an element of cultural difference with Social Security. My people of my skin hue feel like we're going to die tomorrow for whatever reason, and as a result, we want those benefits ASAP, Rocky. We want them yesterday. We don't want to wait to full retirement age. We definitely don't want to defer them to the most furthest out year we can. But as you may know or may not know, and that's why you're here at 15 Minutes of Finance, there are three distinct ages at which come into play for Social Security benefits. The first is the earliest age you can take it, which is, under almost every circumstance, age 62. Then there is your full retirement age. For anybody born after 1962 or 66, you look that up on Google. I told you about me and numbers. Anybody born after 1962 or 1966, that includes me, born in 1970, my full retirement age is age 67. For people under that, the full retirement age is 66. So for most of you listening to this program, it's 67. If you're trying to help mom, dad, Uncle Jimmy, whoever out, theirs is probably 66. So that's your full retirement age. That's the one that computes when you look on SSA.gov, and SSA.gov is where you can go if you don't already have a Social Security account set up to view your statistics. You can set one up today for free. By all means, do it. I'm going to actually put in the chat SSA.gov so you guys know it. Go there. Look up your statements. They used to send paper statements by mail as to what your Social Security projected benefits were. They stopped doing it. I applaud them for stopping. It was killing a lot of trees and costing extra money and postage and paperwork that didn't need to be when you could just go online. So now you can go online, look at your projected benefits. Social Security works as follows, in case we don't even know how Social Security works. You work, you have your wages taxed. That tax is roughly 6.2% of the first I wrote the number down, $142,800 that you make. So if you make one under 142.8, your whole salary is taxed at 6.2% for Social Security. If you make over 142,800, only that first 142.8 is taxed. Excuse me. Those funds go into an account. They're not individual accounts. It's a federal group system, and your benefits are computed based on your contribution and your contributable years. There's a lot of different elements of Social Security. I'm only talking about retirement, and I'm only talking about you retiring. I'm not going to talk about survivorship. I'm not going to talk about disability. I actually do a webinar on everything Social Security, and I'll do that webinar top of 2022 if anybody wants to attend. So going back to how to find your Social Security figure, go on SSA.gov, look up your benefit. I'm actually going to share screen today and show you how it's calculated and what a sample looks like. But here's one of the things I said. Mistake number one, taking the benefit too early. You can take it at age 62. When you take it at age 62, you lock in the benefit that you're going to get. It'll never go back up. And it's substantially less than what you would have gotten had you waited to full retirement age. You also have the right, for those of us who have done good financial planning and don't need our Social Security benefit when we're at age 67, you have the right to delay taking it to age 70 at the very latest. So if you take it at age 70, you get an even higher benefit. I think it's indexed at 8%. So one of the biggest mistakes I see people doing is taking it too early. Another mistake, and I'm going to hammer down on each of these, so I'll come back to the taking it too early. Another mistake is Social Security benefits can be taxable. People think Social Security is free of taxation. Completely untrue. And unfortunately, I don't know what's going on with our federal government. They index your Social Security benefit for inflation, but they have not indexed the amount at which taxation starts. So benefits start getting taxed at a very, very low income amount. So I wrote it down because I knew we need to talk about it. If you are an individual, that means when you're retired, you're not married filing jointly, you're not married filing separately, you are an individual. Any monies that you make under $25,000, that's your income, Social Security included, you're not taxed at all. If you make between $25,000 and $34,000, they will tax half of your Social Security benefit. If you make over $34,000, they will tax 85% of your Social Security benefit. Now, hear me out before y'all freak out. This is the amount of your Social Security benefit that will be taxed. This is not them taxing your Social Security benefit at 85%. Let's be very clear with the numbers I'm saying. If you are getting $3,000 a month in Social Security, they will tax 85% of $3,000, which off the top of my head is $2,550, I believe. $2,550 a month will be added to your income, and then that amount will be subject to whatever your tax rate is. We do not want our Social Security benefits taxed if we can help it. So a lot of what we need to do is Social Security planning. The years you take your Social Security benefit, you want to be taking very little else from other places so that you're not taxed, which is why Big Tank is always pleading with you guys to make sure your retirement is tax-free, to get into a Roth IRA, to get into cash value life insurance. So you can take money out to live off of in retirement that doesn't trigger a taxable event. So now when you take your Social Security, boom, it's completely tax-free. The other mistake that people make, besides for making their benefit taxable and besides for taking it too early, is if they have taken it too early. Because I'm not going to win that fight. I'm going to let you know. I can tell people the best financial advice I give them. Some of them are just going to ignore it. The majority of them are going to ignore it. It's been my experience over 24 years. So, okay, you're not listening. You're going to take it at 62, regardless of what I'm saying. Here's what we can do to try to make this up. We can invest the 62, the amount we get at age 62. If we didn't need the money, we can put this money in an account, let it grow. And as it's growing now, if we start taking it at 66, 67, 70, we may have made up some of what we've gave away by locking it in. The number one reason that I get from people as to why they want to take the benefit so early is they feel like, hey, I paid into this. I want to benefit from it. I don't want to die knowing that Social Security never gave me a check. So let's share the screen and let me show you some things that hopefully will help alleviate some of these concerns. Let's first talk about, let me get my StreamYard game tight. Okay. So let's talk about when we're going to die. The reality is, I use myself as the example here. I am 51 years old and 2 months, 51 and 2 months. My life expectancy from today is that I will live another 30 years, that I will live until age 82. If I happen to reach age 62, that life expectancy now will go up to say I'm going to live until age 84. You guys see the graph. I'm not going to read every figure out. But basically, if I am alive at age 70, my life expectancy is actuarially computed to be 86.4. So somewhere between 82 and 86, your boy should drop dead. Let's call it 84 and a half, whatever. So now I did some calculations because I want to really impress upon you guys the importance of delaying taking this Social Security benefit. Let's go to another screen share here. Why don't we? The good old Social Security calculator. Let's share screen. And let's share, stop that one. And let's start another screen share. Give me a second. You know how I am with technology. Here we go. Give me 1 second, good people. StreamYard, Social Security calculator, share. All right. You guys should be seeing what I'm seeing now. Yes, you are. So what this shows you is, I use myself again as the example. Over in the left-hand corner, you can see the birth year of the person, 1970. That's my birth year. I used $142,800 as my income because that is the maximum amount that is subject to Social Security. If I make 1 cent more than that, Social Security doesn't care. I do make 1 cent more than that, maybe a little more. So I just use the maximum number for Social Security. And I put my retirement age 67, and I plan on being single when I'm in retirement. So there's that. With that being said, let's look at what the benefits will be if I took them at 66, 62, or 70. If I chose to take my benefit at age 62, I would get $36,231 a year. That's a little bit more than $3,000 a month. If I waited 4 more years and took it at 66, in reality, this is wrong. It should be 67, once again, for my age. The figure would be, but we're going to use 66. The figure would be $48,502 a year, which is slightly more than $4,000. So I go from $3,000 a month to $4,000 a month, $1,000 extra dollars. In retirement, I'm telling you that $1,000 will be crucial to you. Or if I could delay until the last day a player could delay, I could get $64,534 a year, which is more than $5,000. It's like $5,300 and some dollars a month. So $3,000, $4,000, $5,300. Now, the question that everybody wants to ask is, okay, Tank, I understand that I could get more if I wait. But what about those years I didn't take the money? I lost that money if I waited till age 70. Great point. What I did was calculate what each of those figures would be if I started taking it at 62, 66, or 70, and I died at age 85. At age 62, I would have collected $833,062. $833,313 at age 62. If I took it at 66, by age 85, I would have taken $921,538. That's a difference of $98,000 over those years. If I waited until age 70, I will have collected $968,010. That is a difference of $135,000 over that 18-year period. It's like $9,000 a year that I'll never get back if I take the benefit early. So it is very, very important to delay this gratification. So we're coming up on 15 minutes. I'm always respectful of you guys' time. I'm going to come back tomorrow and complete the Social Security calculation side of things, and then we'll move into 401ks and tax-free retirement income. So as always, I thank you guys for attending. I will put these figures in the chat even as I close out in a few minutes. And I want to see you guys tomorrow so we can continue the conversation. And I want to remind you, wealth is not only for the wealthy. Have a great, great day.